KTRS. Good morning, Dwayne. How are you?
Doing great. Good morning, Doug and Kelly.
It's nice to have you on board. I see that the Dow was down, but NASDAQ was up. The S&P was off just a smidge yesterday. How much of this is because of Europe or oil prices or a combination of both?
Well, you're pretty smart. You're looking at everything there. Yeah, the Dow
well.
was down 57 points, closing at 21,410. And yes, we had a sell-off in oil, which closed at $42.53 a barrel, its lowest level since last August, so 10 months ago. Oil's on track for its weakest first half of the year, weakest since 1997.
That doesn't bode well for people in Texas and other parts of the United States that do drilling and that sort of thing, because they tend to just basically pack up the gear and say, we're not doing anything until the prices go up, right?
You know, historically, that's very much been the case.
Okay.
This time it's a little different.
Really?
You know, technology has changed oil. In the past, you know, I've been doing this business since 1985. In the past, it's supply, demand, it's what happens in Saudi Arabia and the Middle East, and that drives everything. But when you look around everywhere, you have countries like Brazil and Venezuela and Russia that are desperate for money, and they need to put oil out there as much as they can. They need the cash flow. The U.S. is getting the most oil out of the ground at the cheapest level we've done for decades, literally. So the question is not just the price of oil, but the profit margin on each barrel we get out of the ground. So thanks to high-pressure polymers that can go another quarter mile deeper than they used to, they can use the same well. Technology allows them to stop and start a well much quicker than 10 years ago or 5 years ago. So technology is having an enormous impact in what we're seeing, both with the stability of oil, the competition, the price of oil. Yes, it may do a little slowdown down there, but it's got to go a lot lower to really shut them down like it used to in the past.
Okay.
You know, times have changed.
Yeah. So Oracle had one of those calls yesterday to talk about earnings, and up or down, or what's their outlook in general terms?
Correct. So yesterday, after the market closed, Oracle reported their profit for the year, and this is their fiscal year time period, up 14% from a year ago. Revenues were up 3%. So it's talking about good profit margins to increase revenues by 3%, but profits by 14%. These numbers were led by web services as opposed to the old-fashioned software stuff. So as they keep evolving from the software concept to the cloud, and we keep hearing about the cloud, think of servers and information more in cyberspace. So it's really their best growth in over 3 years. And this morning on this news from overnight trading, they should be opening first trade of the day at probably a new all-time high.
Very good
so
for
good
them.
News out of Oracle.
So what's the word we've touched on this with one of your peers about the feds and stress testing the banks and the reports. What's going on with that right now?
That's a good point. The bank stress test is going to be released sometime today, I believe after the market closes, but I'm not sure the exact time. So the Fed, since the financial crisis, it's becomes obviously a much, much bigger issue and a focus. So the Fed is releasing reports in two parts. One is today. The second part is next week on Wednesday. And it's about the health of the banking system. The numbers that come out today will come out more of the general stress test of the entire banking system. So, think of it, they examine under the weakest possible economic scenario how the banks hold up, and they report on the system's health. So it's not just reporting on today's, but what happens in worst case scenario. And from that, then they examine the health. Well, why is it so important? The banking health examines economic growth. When banks aren't healthy, they don't lend. People can't borrow. Companies can't borrow. The healthier they are, the more lending takes place, the more economic activity can take place. So it really does talk a lot about economic health as you look at the banking system being healthy.
Is there any one granted, there are a lot of small institutions in this country that are probably fiscally not in the best of shapes, but is there any major bank or organization that could be considerably be looked at as having a problem right now that you're aware of?
I'm going to say, first off, not that I'm aware of. I want to put it in perspective real quick.
Yeah.
2008 was a financial crisis. We're dealing with almost 9 full years ago now, when you go back that far. And so in the past 9 years, banks have been extremely strict in lending. If they're extremely strict in lending, they're not making many bad loans. Okay, so now you have to go back to more of the bad loans came from before that. Most of those situations, corporations or mortgages, they've already gone bankrupt or they survived. Mm-hmm. There's not many going bad now that survived the last 8 years. So I think you really have a banking system the healthiest it's been in an extremely long time, going back literally decades. And definitely, I think the numbers should come out fairly positive as they look at them.
Very good. Dwayne, thanks so much for the time this morning. We greatly appreciate it.
Glad to. Always good to be with you guys.
All right, thanks. Dwayne Thomas, Senior Vice President for Investments and a Branch Manager of the Clayton Office for Stifel, joining us this morning here on the Big 550.